G'day folks, welcome back to Pizza Investing. It's April 9, 2024. This is the update for natural gas, copper, crude oil and iron ore. And since our last update, nat gas and iron ore and copper have risen slightly and crude oil has dropped. We'll go to the heat map next, and here you can see first off on the monthly, weekly, daily trends, natural gas is a bit mixed. There is a bit of a push to the upside, but nothing too dramatic yet. We need to see the weekly turn bullish as well. At the moment it's neutral, and I'll explain what these long neutral and bearish signals mean on the charts. You can see crude, US crude and high grade copper are bullish across the board, so meaning you can take long positions on the smaller time frames, especially if all three of these time frames are in the same direction. Iron ore is predominantly short, although it's turned neutral on the daily, so just careful about going short. We may see a bit of a retrace on iron ore. So looking at nat gas first, this is the daily chart and the hourly. So what we look at on the trends, we look at the CCI 150. As in this case, for example, if the CCI 150 trend line is above the moving average band, that's considered a bullish momentum on our heat map. If it's below, like it was back here, it's bearish, and if it's in between, that's neutral. So currently on nat gas, it's short on the monthly, neutral on the weekly, and you can see here on the daily, it's breaking above, so it's bullish, which means you can take trades predominantly, especially if it turns bullish on the weekly. You can take trades on the hourly or 2 hourly or 4 hourly time frame. So what I've got here as well is the ADX 25, which helps support that bullish movement, and down here I've got this stochastic market forecast. You can see there it's still very much oversold, no sign yet of a pullback on the daily. Now as well, you'll notice if we zoom in on the price chart, we did have a little slight bullish divergence in that little higher lows on the CCI versus lower lows on the price. It bounced and hit our target range, and that was a 23 to 38% Fibonacci retracement. So again, for those new to the channel, that's a minimum target range we look at for these divergence, the 23 to 38. In this case, it bounced right in the middle of it and then bounced back down again. Sometimes they do go a lot higher. For example, here there was a bearish divergence on the CCI, lower highs versus higher highs on the price, and the price actually came back quite substantially, well beyond 100% retrace level. Now on the hourly chart, before I zoom in, I first look at the stochastic market forecast here. You can see it's very much still oversold. Made a couple of efforts to break above it. This was the highest it made back there. You can see there it made a nice little ramp up, but then it quickly collapsed. So we'd like to see it break above that 50 level to be more bullish. At the moment it's still hovering around the 25 level. And if I zoom in, I've drawn these diagonal ascending and descending trend lines. You can see there it started trending down on between that channel initially. We had a bullish divergence here. You can see there lower lows versus higher lows on the CCI. It broke up, hit our target area, 23-38% level. In this case, it went much higher than that, and that range was done up to that previous high there. Then we had a bearish divergence here. This is higher highs, broke down, hit our target. In this case, again, came down around about the 50% level, and I've drawn there a dotted line which indicates the 61%. And again, just to reiterate for those new to the channel, that's the Fibonacci range. So again, we choose the closest range, and you can see there the 61%. If it broke below that, that would have been very bearish outlook, but it bounced just short of the 50% level. It bounced from there and made some higher movement since then. So again, pretty much, as I said, mixed signals across the monthly, weekly and daily, and also the hourly. I wouldn't be trading this long yet until I saw the weekly also break into a bullish movement on the CCI. Before I leave nat gas, just want to quickly show you a trading idea, and that's basically, especially if the monthly, weekly and daily are aligned, for example, then you would take long positions. So you can see here, if the daily was long back here, you could probably somewhat safely approach and trade on the hourly or smaller time frames. So you can see there when the CCI breaks above the moving average band, assuming again the daily and the weekly were aligned, you can see there on the hourly chart, you would have taken those trades there. Let me zoom in here and make it a bit easier to read. So you can see there, when that broke above the CCI there, that would have been quite, you'd wait for it to break above on the hourly as well, somewhere about there. you would have taken that trade, and you would probably close it out once the CCI broke within that moving average band. So you would have probably opened up around there somewhere when it opened there, put a stop loss below those lows, and closed it out when the CCI broke into that moving average band, and so on. So when it drops below, again, trading in the direction of the bigger time frame, you could have taken some long trades there. You might have been stopped out there, or you might have got out for small profit, depending on where your stop loss was. Again, another one there, and so on. Again, you can see there, predominantly long trades worked in our favour once the larger time frame is in our direction. Next, look at US crude. And remember, US crude is long across monthly, weekly and daily time frames. And here on the daily, you can see that's nice and ramped up above the moving average band. The ADX is also bullish as well. And the stochastic market forecast is also above the 50 level, bounced off the 50 and making further upside. So just a nice bullish movement at the moment. Now, again, remember the trading idea is when all three timelines, the monthly, weekly and daily, are aligned, that's where you can start taking long trades. So here, for example, you would have taken long trades there before I analyze the hourly chart. Let's go back to this point here. For example, you would have taken long trades from that point when the daily was above the moving average bands. You wait for it to break above the moving average on the hourly as well, take a long position. You may have been stopped out there depending on where you placed your stop loss, if that broke in that moving average band. But then again, it breaks above into long, and you let it go, and you would have probably closed it out when it closed in that moving average band there. So you would have made that little gain there. Wait for it to break above again. A couple of little false breaks possibly, but again, depending on how wide your stop losses are. And again, let it close it out when it breaks within that moving average band. Now, yes, the price has gone up from there, but notice what's happened here now. If we analyze this in more detail, there is a bearish divergence here. And as soon as you start seeing the CCI start trending lower, but the price start going higher, so you wouldn't have probably noticed it until this peak here and that peak. Actually, that might have been your first peak there. You can see there that CCI, there's lower highs versus higher highs on the price. The price kept rising, the CCI kept dropping. That's your bearish divergence. Now, in this case, the price reached this level up here, this minor resistance at 83.12, and started falling off. Now, what I've got here is a VWAP 50. You can use that as a stop loss as well, by the way, when you're trading this. But you can see that it starts falling off, and it broke below that VWAP, and the CCI kept falling off. Now, if I move on to let me just zoom into the latest price chart. You can see there the higher highs on the price, lower highs on the CCI. Now, in this case, the price fell off, and you may have, depending on, you can see there the CCI is still falling off, so you may have actually drawn that. Let me just see before we go there. Had we taken it to that level, you can see there that wick has broken into the 23% level, and then it started making a slight movement to the upside, but notice the CCI is still lower, it's still trending down. In which case, what you do then, let me just delete that. So if we draw that trend line to that recent high, you can see there the CCI kept falling off. That reached a high, and if you did draw a Fibonacci from that low to that high, you can see there it broke quite significantly into that 38% target range, and it's actually bounced off that 38% level. Now, again, the key area to look out for, and I've got a resistance or a support line there at 83.12 at the 61% Fibonacci retracement level. It may actually come back. You can notice the CCI is still dropping. It may actually come back and fall further, so just be careful. Even though the monthly, weekly and daily are long, just be careful. This can still be a position where we may want to watch it break to the downside. If it breaks below that 61% level on the hourly, then it's going to threaten a bearish signal on the daily as well. You'll notice there it's actually pulling back towards that moving average band on the daily, so we may see a weakening in the oil price soon. So high-grade copper is long across the monthly, weekly and daily as well. And this is, again, on the daily, you can see there it's a nice big bullish movement above the moving average band. The ADX is also bullish, and the stochastic market forecast indicator is bounced up from that 50 level and still making further highs and actually reaching the 75 level at the moment. So again, it's currently in this range. It's just short of that key resistance at 43,568, broken up past that resistance at 41,711. And if we look at the hourly chart, before I zoom in, I like to always look at this stochastic market forecast indicator. That's still in the overbought territory, well above 90. So just be careful, we may see a bit of a pullback. There were a few bearish divergences, one here. You can see there, pulled back, hit our target, actually fell a lot further. There's a bullish divergence there versus lower lows on the price, rose, hit our target. And you can see there the CCI kept rising versus lower lows on the price. Got up to this point here, and we had a declining CCI versus high highs on the price, dropped back, hit our target, dropped a bit below it, and bounced up from there. But notice the CCI is still falling off. So theoretically, we should see this. If I was to draw that actually from there, I'll extend that one actually to that high. Then that is still a bearish divergence, same area on the CCI, lower highs on the CCI versus higher highs on the price. Now, for that to start breaking down, we need to see it break down a lot more than where it is now. But it's currently in this range. If I was to draw a trend line down there, that's one potential trend line. It needs to break below that potentially, and if it was at a minimum retrace level, if it was to break down today, this could still go higher. That would be the initial target area. I won't draw a target yet, but again, we need to see it break down there. That'll be the initial target area before we take any further bearish movement. But again, for this to fail, we need to see the CCI rise higher than that point, in which case we'll see the price rise a lot higher as well. At this point, it's a bit too early to place any potential trades on this. I don't normally trade these divergences. It's just more of I use divergence primarily as an area to get out of a trade if I'm going long, or if there's a bullish divergence, get out of a trade if I'm going short. You can trade them, but it's a bit risky, as you can tell. I wouldn't be entering in here. It's a bit too high. I'd like to see it break to the downside, in which case you'll have a few points to gain if it dropped from that trend line. So let me just get rid of that Fibonacci retracement. So that's just a projection if it started falling from now. So again, just be careful. We might see a bit of a retrace to the downside, considering high-grade copper is bullish across all three timelines, monthly, weekly, and daily. Iron ore is, again, looking at the monthly, weekly, it's bearish, and on the daily, it's neutral. You can see there on the daily, it's broken up into that moving average band. So a nice big bullish candle from our last days of trade. The ADX is showing a bearish momentum primarily, so it's still on a bearish trajectory. And if I zoom out, stochastic market forecast is broken below the 50, so again, very bearish still on the daily, but also on the monthly and weekly as well. Now that's currently resting off this minor support at 749, and then the next level of support, I've got this diagonal ascending trend line along those bottoms, and that will be our next level of support if it breaks below that. But at the moment, we may see a bit of a retrace to the upside. On the hourly, before I zoom in, again, you can see on a stochastic market forecast indicator, it's broken down, currently bounced off that 25 level, but still very bearish. And if I zoom in, you can see we've got I do keep these trend lines in here, which showing the divergence. We had a bearish divergence there versus those highs there, broke down, hit our target, went almost about the 50% level between that Fibonacci range. There was another bearish divergence there, lower highs on the CCI versus the price, broke down, hit our target, and then moving along. That's why I don't like trading these, because even though it's going against the trend, we had a bullish divergence there, broke up, hit our target, but then collapsed again. So had you gone long and stayed in it, thinking it's going to correct and go long, then you're stuck in this. So just be careful. That's why I don't like trading them. The VWAP, as you can see, is still pretty strongly in a downtrend, but also the monthly, weekly, daily is predominantly short as well. Now we do have a bullish divergence here, higher lows on the CCI versus lower lows on the price, and that's our latest retrace, hit our target, broke down again from there, and it's now moving higher. Now if I draw a Fibonacci between that level and that level, actually I should take it back, that's not right, because you should take it back to the previous points before the divergence started. So that should be between that low and we go up to that level. That's before that divergence started, so that would have been the previous high. You can see there it's hit our target at 23 to 38%. It's currently resting around the 50% level. And I'll just draw that marker for the 61%. That's our key area to look out for. If it breaks above that, we may see a reversal. Otherwise, it may actually bounce down from any one of these places. Of course, it can go a bit higher and bounce down from there, but that's a key area to look out for generally. And I say generally, not 100% of the time. It does correct a bit higher if it breaks above that from a bearish momentum. But at the moment, iron ore's neutral on the daily, as I said. And if we see that break above 61 on the hourly, we may see it starting to break above to be a bullish movement on the daily as well. But again, I wouldn't be going long anytime soon. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending long on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.